Don't sell your XRP. The richest people who own crypto don't sell when the price is super high, okay? They borrow money using their crypto as a promise instead of selling it. That way, they don't have to pay taxes right away on big gains. Got it? Most regular people don't even know this trick exists. I've helped some of the richest families here in America, and I want to share the secret thing they do. They live off their money and crypto without ever selling it. They keep it forever. By the end of this story, you'll learn the exact steps the rich people use. They keep their growing stuff forever, live nicely, and you can do it too with your XRP. So, what is this trick called? If you don't sell your crypto or other stuff, how do you get cash to spend? What does that even look like? Lots of people call it infinite banking. It means the things you own keep getting more valuable over time. You can do this with a special insurance plan or other smart setups. But the main idea is simple. You borrow money using those things as a promise. Borrowed money doesn't get taxed. You still have to pay some interest on the loan unless you do it with the right kind of insurance plan. But mostly, this is what billionaires do. They own a lot of shares in big companies. They borrow against those shares to pay for their life. When they die, the loan gets paid back with the shares that grew bigger. Simple, right? Most people think they only have two choices with crypto. Hold it and hope it goes up. Or sell it. But selling means you have to pay tax right away. In America, that's usually 15 to 20% for long-term gains at the federal level. Other countries are different, and that's only long-term. If you just bought it this year, it's taxed like normal pay, way more. Add state taxes, and you could lose 25 to 35% on long-term or even 50% if it's short-term. That means if you have $1 million in Bitcoin and sell, you give $250 to $350,000 just to taxes. That's a huge chunk. Why give so much to the government when you can keep it? Rich people have used borrowing with life insurance and normal stuff for many years. Very rich people borrow against their stocks instead of selling. The interest is okay, and they can borrow a good amount. People say Elon Musk used his stock as a promise to borrow money. He bought Twitter for $40 billion that way. He borrowed against his SpaceX stock. No tax to pay on that loan. And he could use it to buy Twitter and get some tax breaks too. Now, the same borrowing trick works for crypto too. We do it at Digital Wealth Partners and Digital Ascension Group. We use a special three-party agreement. There are people ready to give loans using your crypto. We can help you get a line of credit for your digital money. So if your stuff keeps going up in price, it can help you pay back the loan later. Here's an easy example. Let's say you borrow against your XRP today at $250. You won't borrow a lot. Right now, we can get 45% loan to value. So maybe you borrow against only 10%. You have $1 million in XRP. You want $100,000. Cool. You put up the million in XRP. Even if the price goes up and down a lot, you're probably safe from getting forced to sell. It would have to drop a ton. That $100,000 is tax-free money, and right now you pay about 1% a month interest. So, $1,000 a month for the $100,000 loan. You can keep rolling it. As your XRP grows, you borrow more and pay off the old loan, or you set aside some money, like $12,000 to cover the interest for the whole year. Now, you have the rest tax-free. That's still cheaper than selling and paying 25 or 30% tax or even more if it's short-term. Using something that grows in value is very normal. People do it in regular finance all the time. You borrow against it. There's a loan-to-value number and interest adds up over time. If you do it inside an insurance policy and the stuff grows, the cash in the policy can pay off the debt. Most people still make some payments while alive, but as the market does well, you get more money to borrow. You just pay interest on what you take. The borrowed money itself is not taxed. Not as gains, not as income because it's debt. Debt doesn't get taxed. With good planning, there are ways to handle the interest. We'll talk more about that if you stay till the end. So, there are three main ways to do crypto infinite banking. It depends on your situation and how much you have. 1. Borrow directly against your crypto in safe institutional storage. We do that at Digital Wealth Partners with Anchorage. 2. Use DeFi lending. That's the decentralized way. 3. Put it inside a special insurance policy. Private placement life insurance. We help people with that too. Each way has different minimums, costs, and good points. We're going to look at them and see what fits your pile of crypto best. Picking the wrong one can cost you big fees or missed chances. Picking the right one can save you hundreds of thousands in taxes. You keep your crypto and watch it grow big over the next 5 or 10 years. We know digital money is going to grow a lot. The first way, again, is borrowing directly against the crypto. Maybe you keep it in your company, LLC, trust, or even your own name. We can help you do this at Digital Wealth Partners. You need an LLC or trust to work with us. We can't do it for just regular people, but we can help you set up the company or trust if you want. It has many extra benefits compared to DeFi. We use a 3-party agreement. Your crypto sits at Anchorage in a super safe separate insured account. Up to $100 million protected. It's still your crypto. It's like the safest cold wallet ever. Your family doesn't even need to know about crypto if you don't want. Family members can be on the account as helpers or people who get it later. It's like a super safe bank account for crypto. Normal loan terms are 30 to 60% loan to value. Bitcoin gets the higher side. XRP is usually 45 to 50% right now. That's just how careful lenders are today. As time goes on and more money comes into crypto, and if XRP gets called a top safe asset, lenders will probably give more and charge less interest. Right now, interest is about 8 to 15%. It depends on the crypto and how much you give as promised. Say you have $500,000 in Bitcoin, you might borrow $150,000 to $250,000, 30 to 50%. We usually say keep it lower, 20 to 30% max for safety, but some people like more risk, so we can do it. Interest rates are 8 to 15% right now. They show how the crypto loan world is today. The big win over DeFi is you stay safe when prices go crazy up and down. We just had one of the biggest drop events ever. None of our clients lost their crypto. In DeFi, many people got wiped out completely, gone. With us, you do some simple ID check, KYC. It's not hard. If you're not doing bad stuff, we can help. Money usually comes in 24 hours, sometimes even 30 to 45 minutes, if everything is ready. You can get it in USDC or regular bank wire at whatever you want. If the price drops and there's a margin call, our partners give you time, usually 24 hours to fix it, sometimes more if it's a weekend. They want you to keep paying interest for the whole time. That's how they make money. In DeFi, there's no one to talk to. It's automatic. You lose everything fast if prices drop hard. As crypto gets older and rules get clearer, loan terms will probably get better. Banks might start lending against crypto too. We've already heard talk about using it for house loans. I think by end of 2025 and 2026, interest rates will drop a lot. More competition, less risk, maybe down to single digits, like prime +1 or around 9%. Early people who set this up right can refinance later when rates drop. It's like buying a house in the 80s with high rates, then refinance later when rates fall and your house is worth more. You keep the same payment but borrow more money. Very cool as things move forward. Now, the second way, DeFi. Platforms like Aave and Compound let you lend crypto against your crypto. There are others too and some regular exchanges, but let's talk DeFi. Usually, no ID check. Anyone can do it. That's the point of DeFi. You get money almost instantly like USDC or Tether, but they lock your crypto. It's not in your control anymore. There's risk if the system gets hacked. No insurance. Interest rates change all the time based on the market. They can go up suddenly if they think it's risky. The biggest danger is automatic selling liquidation. If your promise isn't enough anymore, the smart contract sells it instantly. No warning, no second chance. You lose your stuff fast if you borrow too much. I've seen people go broke quick this way. That's why we have safer rules with our partners. Crypto prices swing hard like we all know it. For small amounts in short time, DeFi can be okay, like quick 10 or 20,000 against ETH for a couple months fast and easy. But for bigger money or longer time, institutional way is much safer. If it's over 50,000, I would go with the safe partners just for protection. The third way is private placement life insurance. This is where classic infinite banking happens, but it needs a lot more money. Usually at least $5 million to start. It takes longer to set up. To borrow against the policy, you usually pay premiums over 5 years, sometimes 7 to 10 years. That means you pay in over time, not all at once. The tax people made rules, so you can't just dump everything in quick. You want to avoid special bad rules. This is for people with big cash. In America today, you put cash in, then buy assets inside. If you're not American or Canadian, you can do fancier versions offshore, like Bermuda or Cayman. There you can put crypto straight in. Every way has good and bad points. Pick what's right for where you live and your family. Inside the policy, it's tax-friendly. You can trade things as long as you follow the rules. In America, you need at least 5 different things. No one thing can be more than 55%. You need a professional money manager, RIA, to handle it. But you can put almost anything inside: real estate, private companies, crypto, stocks, loans, lots of choices. As the cash and assets grow, you borrow against the policy. It's more complicated than DeFi, not fast and simple. If you want quick, use the first 2 ways. This one is for long-term tax saving. Maybe borrow in 1 or 2 years. It needs planning. If you want the best experts for this fancy stuff, reach out to us at Digital Ascension Group. We have connections for these special products most people can't get. Nothing here is financial advice. It's just for learning and fun. Always talk to a real financial advisor. We can connect you with ones at Digital Ascension Group who know crypto and these tricks. Check digitalwealthpartners.net. They have lines of credit and everything. If you like it, go to the contact page. Now, let's look at a real example with one of our clients. This person bought XRP when it was 50. They have $4 million worth now. Back then, it was worth about $2 million. They believed it would go way up, and it has a bit. They took a loan back then about $500,000. If they sold $500,000 worth as it grew, they would owe big tax. But because they borrowed and the price went up, their loan looks small now compared to the value. They can borrow even more if they want. That's the magic. As your crypto grows, you can borrow bigger amounts. Just use the money smart. Don't waste it. Have some saved or put it in things that make money to pay the interest, or save enough to cover interest until you can refinance later. Work with an advisor on this. I'm not giving advice. We are the only ones with these special partners at Anchorage for safe borrowing. We can guess the yearly interest cost with today's rates. As your XRP does well, refinance later. Put the money into houses, businesses, or other things that make more money than the interest you pay. Live off the extra. Pay the loan. Avoid tax. Have the best of both worlds. We don't help with DeFi. We can do the long insurance way or the quicker LLC trust way. The big message: it's great to use the money for life, but try to make the borrowed money create more money. Rich people pull money out and buy more things that grow. They built huge house collections this way. As stuff grows and rates drop, refinance, pull more money, buy another house. That one makes cash, you keep collecting more. I'm not saying buy more crypto, though some do. We like things that make steady money. Maybe later when XRP is higher, there will be other digital things you can put money in that pay you back. You get the growth plus cash to pay your XRP loan interest and extra for you. That's how you keep rolling it. There are really only 3 things you trade for money. 1. Time. Most people work jobs or run small businesses. 2. Knowledge. Like the plumber who fixes it in 3 minutes and charges $500 because he knows exactly what to do. 3. Money. When you have lots, put it to work to make more money and collect more things. That's what rich people do. Once you're rich, you should only need to get rich once. Then use smart debt. Diversify, lower risk, and keep growing. Some people think debt is bad because that's what we hear. But debt is just a tool. It's tax-free. It's a great way to lower taxes if you do it right. These ideas come from real work with clients who have big crypto. If you're serious about borrowing with crypto and want to talk with others doing it, check the link in the comments. We have a group with over 9,000 people sharing these money ideas in crypto. If you want us to help you do the whole thing, go to digitalfamilyoff.io, link in comments too. Now that we covered the 3 ways, let's talk about paying the loan without selling your crypto. You do have to pay the interest somehow. One way is use part of the borrowed money smart. Some people put some into things that pay regular money, like annuities or other setups. Annuities might take a year before they start paying unless you put a lot in. Look for things that make income to help with interest. Example, you borrow $1 million. Put $200,000 into something that makes money back. Maybe a rental house that pays you every month or quarter, or a digital thing that pays yield. Get growth plus enough to cover interest, or just set aside enough to pay interest for the time you plan, then refinance later when it's worth more. This can keep going forever. Another thing for family planning is insurance on the debt. You can get life insurance that covers the loan if something happens to you. So your family gets the crypto clean without having to sell it to pay the loan. Example, you have $2 million in crypto, borrowed $1 million. Get a $1 million life insurance policy. If something happens, the insurance pays the loan. Your family keeps the full crypto. Premiums depend on age, health, and plan type. This way, you use your crypto while alive. Borrow for life. Fun business. Skip the big tax from selling and your kids get it clean later. You can do this with a simple term policy or mix it with the fancy insurance plan. Lots of people just borrow in their LLC and get cheap term insurance to cover the debt. Now, let's look at costs. People get scared of 9 to 15% interest, but look at the whole picture. Selling means you pay 25 to 35% tax right away, maybe more, and you lose all future growth. Borrowing at worst, 15% keeps everything. You still own the crypto. If it goes way up, like Bitcoin did over 15 years, you win big. Quick examples. Scenario A, sell $1 million of Bitcoin, pay maybe $200,000 tax. Long term, no state tax, easy math. You keep $800,000 but no more Bitcoin growth. You can invest the $800,000 somewhere else with more tax later. Scenario B, borrow $800,000 against the 1 million Bitcoin, no tax. You still have all the Bitcoin. You get all the future growth. We can't do 80% loans today, and we wouldn't tell most people to, but you get the idea. You keep choices. You can refinance when rates drop. Add more promise if prices dip. Stay in for big upside. No tax pain. If your crypto grows more than the interest rate. Every extra percent is money you keep instead of losing by selling. If price jumps big, you won't feel bad for selling too early. In the end, the difference between big lasting money with crypto and just riding the wild ups and downs is doing it the right way. These ideas are real. People are using them right now. Holding is not enough. You need a plan, safety, and a way to use the value without ruining the growth. This is how the richest families in the world do it. Rockefeller style. Borrow against growing things. Never sell. Pass it to kids tax-free. Grow it for many generations. Now this playbook works for crypto too. The setup is ready. Partners are there. Tax savings are huge. The only question is, will you set it up now before crypto gets so high you have to sell and pay giant tax? Or will you join and borrow against it, keep the upside, and build family wealth for a long time? The choice is yours, but the time to do it right won't last forever. If this helped you, please like and subscribe. We'll see you next time.